So looking at Jerome Powell, the chair of the Federal Reserve, and what he meant when he was questioned. I believe it was Pat Toomey, who the senator, who asked him, why everything is transitory. Life is transitory. How long must inflation carry on before we stop calling it transitory? To which he replied, well, I guess we'll just stop calling it transitory then. We need to find a new word for it. Now, this is very interesting to see somebody sort of self-correct like that, considering how often we've seen the word transitory. And then for the person that really brought it about to say, actually, we're not doing that anymore. That's not fashionable. I'm wearing new shoes this week. What do you think that means for markets, John? Because inflation and the Fed, and what the Fed does about inflation, is really the name of the game, aside from the new COVID variant.
Oh, look, the Fed is still the dominant central bank in the world, of course. And if the Fed is going to make any meaningful policy shift, that's going to have an effect everywhere. And indeed, it's kind of implicitly already having an effect everywhere because the dollar has been relatively strong. And why is the dollar relatively strong? Well, because people have been assuming that at some point the Fed's going to get it in gear and start tapering and raising interest rates. And now you have the recently confirmed second term chairman of the Fed, and those terms, right? Those terms are 7 years long. You have the recently reconfirmed chairman of the Fed, who is going to basically say this isn't transitory anymore. He feels he has a mandate to sort out what appears to be a non-transitory inflation problem. We haven't seen that really since Paul Volcker was around. That is, to have someone come in in Volcker's case, it was his first term, but here you've got Powell being reconfirmed to a second term. We haven't seen someone come in amidst such a big surge in inflation and state straight away, right off the bat, we have an inflation problem. This is not transitory. The message is clear. Powell is preparing the market for a substantial increase in interest rates. Now, it may never happen. The market may crash. There might be disorder. It might not happen. But if things continue as they are, if the equity market continues to be at these elevated valuations and inflation remains elevated too, Powell is going to raise rates, perhaps by more than markets expect. It is, again, a very dangerous environment for markets when a Fed chairman feels he has a mandate based on a new term and based on an inflation problem that is clearly not something one can ignore. And now he's actually said it, right? He's acknowledged it. I think it's a big deal.
It is a very big deal, John. And, are we rooting for Powell here? Is he the good guy now, right? Is he actually taking the right course of action, would you say?
Look, we're so deep into this mess, right? There's no easy way out.
There's no
There's that
good
old
guys or
Irish
bad guys.
proverb, right? The young Irishman is walking across the countryside, and a young Irishman's walking across the countryside, comes across an old Irishman, and he figures the old guy, sort of knows where things are at, and he says, "Hey, excuse me, sir, do you know the way to Dublin?" And the old man replies, "Well, I wouldn't start from here, son." And I think that's really kind of, nobody wants to be in this position. No central bank wants to be facing this sort of situation. There are no good choices. However, Powell's old enough to remember, of course, what Volcker did. In the end, Volcker was lauded as a hero, and I think rightly so. I think that's fairly deserved. But the fact is, the United States is a far more indebted, less productive place than it was back when Volcker was around. Yes, the 70s were a difficult decade, but they were a difficult decade which was characterized by a much larger workforce. It was characterized by a federal government with running far lower deficits, with a far lower accumulated debt. The United States, while it had become a net importer by the 1970s, there wasn't much in it. Whereas today, the US is hugely reliant on imports from the rest of the world. And of course, that includes energy. And so it's a different animal. It's kind of like when Volcker was around, he was trying to steer the ship, and the ship was, say, a Panamax size ship that was still able to maneuver through the Panama Canal. Powell's in charge today, and he's at the helm of a Supermax ship, which is that much bigger, that much less maneuverable, that much more difficult to turn around. And I'm not sure anyone is up to that job.
No, it doesn't feel like a place you'd really want to be in unless you're something of an adrenaline junkie and can take a lot of flack.
Yeah.
Because, going to your point, John, Volcker, way back when he started really aggressively hiking interest rates and killing inflation, there were people after his head. There were people protesting, in Washington D.C., saying, this guy needs to be removed. He's crippling us. I believe it was a big part of the agricultural community because they had been used to the inflationary pressures and they'd based their businesses around it. So when they saw the high interest rates reining all of that in, it was causing a lot of them to go bankrupt, and it was very bad for them. It was really not a good time to be Paul Volcker unless you could really take all that heat. So it'll be interesting to see if Powell gets vilified in the press now that he's starting to do the thing that is considered bad for the markets. Because if we do see this happen, and he starts taking the money, the printing presses away from the equity market and the assurances that come with that, it does feel like the worm's going to turn on his reputation.
Look, I mean, the guy's just been reappointed, okay? He kind of has an implied mandate now. It's not clear whether he will choose to exercise it or not. But now's his moment. I mean, if he's going to get religion and try to fix this inflation problem, he's going to have to get to it. Now, that said, remember, the source of a lot of this inflation is the original negative supply shocks from 2020, which, whatever people thought were necessary. And 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 yet it looks like, and he's telling us this, the inflation thereby generated is becoming embedded in the system. People are simply beginning to expect higher prices. They're demanding higher wages as a result. They're not going to wait now and see what happens. They just kind of assume prices are going to keep going up. That changes psychology. It is a sort of a social tipping point, and it's very difficult to deal with. The only way Volcker really dealt with it was by forcing entire industries to have to literally downscale and let a lot of workers go to come to terms with the new reality that you just weren't going to get paid as much as you were. And certainly in construction, this was true. I mean, you mentioned about how unpopular Volcker was in the early 80s. Absolutely. The construction industry, or at least some elements thereof, they sent huge piles of lumber to his office, literally dumping it at the front of the Federal Reserve, and all the 2x4 plywood, timbers, they were signed by construction workers who had lost their jobs, and they had all this excess lumber they had nothing to do with. So they signed it and sent it to Volcker's office at 130 Liberty Street, I think it is, in New York. And I mean, could that happen again? Of course it could. But if Powell is going to get religion, it'll be now. He's not going to wait. He either acts now or he's probably not going to act at all. I think we're going to learn an awful lot over the next few months.
Yeah, it certainly feels like we've reached a major tipping point with him saying that inflation is no longer transitory. John,
Yeah.
if we were to see something of a repeat of that, do you think it would be things like lumber that would be the most affected by a really steep rise in interest rates, or do you think it'd be other sectors who would be protesting and sending various objects to Powell's office?
Oh, look, it's anything that is growth sensitive is going to be crushed if the Fed gets very, very serious about trying to bring inflation down quickly. Now, that said, I think even based on his recent language, I think Powell is going to tiptoe into this. But again, you're tiptoeing into a minefield, right? A debt and leverage minefield. And a minefield is actually a really good analogy because you know the mines are out there. You just don't know precisely where they are. And if you do happen to step on one, oops, you can cause a financial crisis. Powell knows this. So he will be tiptoeing into the minefield. But I think it sounds like he's going to give it a go. And he's going to, do what he can with his accumulated experience. But there are many growth-oriented industries, such as construction, obviously being an obvious one, and the broader housing market and everything that goes with that. Durable goods, right? Who in their right mind is going to go out and take on a bunch of debt to buy a whole bunch of new white goods or other durable goods or a new car when they're facing higher and higher and higher interest rates ahead as a result of the Fed getting some religion. No, people are going to make do with what they have. So don't get me wrong, they're still going to need basic food, clothing, and shelter, but they'll need non-discretionary food, clothing, and shelter. So all the discretionary growth-related stuff in the market is going to be whacked. And again, this is where tech gets in trouble. How does tech make its money? It makes a lot of money from advertising. Advertising is not out there to get people to buy non-discretionary goods primarily. It's out there to get people to buy discretionary goods primarily. And all of that is going to come crashing down if the Fed gets serious about raising interest rates.
Right. If we put Omicron aside, then, and we just imagine we're just looking at the market and the Fed raising interest rates. So we assume inflation is out of the bag. It's here. It's no longer transitory. There's a change in psychology. People are demanding higher wages and they're paying higher prices, and they're anticipating higher prices as well. Where do you think things start to get really shaky for equity markets and for the Fed's response? Because there's one follows the other here. And of course, I'm asking you I'm putting you on the spot with a really, a $1 trillion question ultimately, John. But if you had to guess with where things start to get really shaky, where would that be? I mean, is that in the near future? Is this, second quarter of next year?
Well,
But of
look,
course, this is leaving Omicron aside, which of
we're in
course is a
December
big thing.
now. We're in December now. And oddly enough, the timing is such that the months in which major market corrections tend to happen it's amazing how many of them fall in September, October, and November. Usually, if you've made it to December, you get a Santa Claus rally, if anything, right? And then you have to, and then in January and February, what you have is you have all the seasonal adjustment around the data, which makes it more difficult for markets to know what's going on. It's very, very hard to look at December to January to February data and make sense of some of the large seasonal adjustments for consumer behavior and things like that. And so you usually wait until March, the next month, when markets sometimes suffer a blow. And I mean suffer a blow in this case from some non-specific, just who knows what it was, tends to be in the spring. And again, we actually saw that, but in 2020, but you could say that was because of the arrival of Delta and the second round of lockdown and whatnot. So I mean, it's hard to it's hard to explain that one with reference to kind of non-specific market dynamics. But
Yeah.
anyway, the timing isn't right now is kind of what I'm getting at. There would need to be some properly bad news. Again, big reaction to Omicron would be potentially something meaningful. The Fed surprising the market with a sudden overnight 50 basis point emergency rate hike. Oh my God, that would do it.
Yeah.
As mentioned earlier, something kicking off with Taiwan in the East or Belarus and Ukraine in Europe, that could do it. But if we're just going to let the market correct under its own weight over the gradual realization that inflation is too high, the Fed's going to do something about it, I don't think it happens this month. It might happen in January. But I think maybe you make it all the way through to March before the market really wakes up to it and says, no, we need to reprice now.